Hey, good morning everyone, and welcome to the PivotBoss pre-market video for Tuesday, June 26, 2018. I am Frank Ochoa, aka PivotBoss. Thank you for joining me today. Here's a look at the daily time frame of the ES. We had a significant meltdown in the previous session. It all began when price failed to hold above the midpoint of that rejection day there. That all started with a failed new high above two-day highs there, and then that led to a massive continuation, which again yesterday was a huge day down, dropping all the way back to 2700 and a half point there. You can see the low coming right back into 2703.75, so a big time down day here. At the moment, price has reached the midpoint of the larger key range. Remember, every time we get too far away from it, price comes right back to that level. More times than not. So this has been the sticky level here that we've been watching for some time. We could continue to see strength off this zone between 2800 and 2700 as price trades in this area, or if price cannot hold that 2700 level, we could be headed back down toward 2600, down into these lows. That's recent lows down here. So this is kind of the mid pivot here between key extremes of the price distribution. I think at the moment the intraday time frame is showing a minor absorption signature that suggests that bulls are trying to defend at 27.15 for a shot at breaking back above 27.30 and returning prices back toward 27.50. Again, it's a weak absorption signature, so any failure to hold 27.15 could open up much more downside selling pressure today. Alright, taking a look here at the NQ. You'll notice the NQ also with a significant sell-off. Now this one we had pretty nicely pegged here last week. 73.20 was the level to watch. We talked about that as an opportunity for watching for rejection. Any rejection of 73.20 would open up a return to move price back against this prior pivot low and into 7100. That was the move we were talking about. And then from there, we mentioned that any pullback could be then seen as a buying opportunity back up. So this move has been completed and then some. It's gotten even as low as 7K, 69.77 quarter. That's a big time move. Now, if price is not able to recover back above at 14.5, so 72.14.5, we could be looking at a significant continuation back towards 66.53 on a longer term basis. So while a short term move here, again, we're seeing another absorption signature on the intraday time frame. 70.40 is the area that bulls are trying to keep bid. Above 7100 would squeeze back toward 72 to 72.14.5. Now again, if price is not able to re-establish back above that zone, it could be a selling opportunity back towards 66.53, and this all comes in from the larger time frame channel that we've been focusing on here. Remember, I mentioned a failure here opens up a move there and then down to here. Over here I mentioned if we got above this high and failed, then we could go here with a shot to go across, but this is the high probability target here and we failed. So now any pullback could be a selling opportunity back toward that zone. So keep an eye on this area. Again, right now this is stacked and sloped, very bullish, but this was the pivot to hold and they failed it, and now any failure at that point again could be a great selling opportunity for a move down. Now keep an eye on the end of the week. By the end of the week, this close, is it going to be below the pivot range for next month? If so, that would be a higher value with a change of bias, which would also suggest a return to recent lows, or at least a pullback. So something to keep an eye on for the NQ. If you take a look here now at crude oil, after the big day up on Friday, we did have our digestion day in the previous session. Price mostly traded sideways, failed new high, pushed price back toward the mid. That's the fade after trend day opportunity right there. Very nice move. Overall, right now we have a 2-day hold. Failed new low today, a 2-day hold, and for the most part we've reached a significant area in the chart right here where there's been some major crossover and rejections. It wouldn't surprise me if price was not able to get much beyond this area anymore, and perhaps we fall back down toward recent lows, maybe even getting towards 62. So I'm not very convinced that we continue higher. Remember, the bulls have had a tough time getting price to go up, and they had one great day. Other than that, it's been tough here. So keep an eye on this LVN right now. We have a 2-day hold. I think a breakout from this 2-day hold could spark the next key move. So tomorrow, any failure to hold this level, or today, 67.47 may open up a return back towards 65. So something to keep an eye on for crude oil. We looked at RTY as a pullback buy candidate, and we reached the zone we were talking about here. We knew that we could get as low as 16.58, and that's exactly where we are right now, 58.90. So this pullback right now within this uptrending market is right at about the point where bulls really need to keep it bid. It's the LVN right in this area. It's the previous month's high price. It's a pullback into the trigger zone, the normal trigger zone there, and at the very least we could see a return back toward recent highs, call it 1721s. So this would be a bounce from, say, 1660 to 1720. So that could be a 60 handle bounce. So again, are we going to see a little bit more selling pressure? Because if we don't hold this level, then we match this move down. So again, 60 handles, we could be looking at another 60 handles down. 1600 could be the next target if we cannot hold this LVN. So that could be something significant here. And if that were to occur, we would likely bounce back to the mid and create a key range that gives us the next key range to watch. So we are at a very, very important part of the chart for RTY. We'll keep an eye on it here. Again, the signature we're developing down here doesn't look very, very strong for bulls, so I'm going to continue to watch this off this zone. Taking a look lastly at the YM. We talked about this one before and how any failure to hold above the previous month's high could rotate prices as low as 24.20 and 24K, and we've gotten into that zone. So it took a couple of weeks, but it drove there, and not only that, it was a leader in dropping this thing down. So not that the YM wants to be a leader in selling pressure here, but it definitely was outpacing the rest of the market. It was dropping significantly ahead of the rest of the market, and really reached its target much quicker than everything else. So I mean, this was a significant move. It would not surprise me again if we drop to the lower edge of the range here. This is 23,500. This is where the recent support has been found in this chart. We've failed to hold the midpoint of the key range. I would say that any balance could be a selling opportunity for a continuation toward 23,500, especially if price cannot reestablish back above the previous month's close in that zone there. So this could be significant. A failure to get back above 24,886 again could be a sign that we are headed down back toward recent support. So again, YM continues to be quite bearish compared to the rest of the market, and that could continue into the lower edge of the range. All right, that is it for now. I want to say thank you very much for leaving me comments and giving me feedback and suggestions. Continue to do so. Please like, share, subscribe, and I'll continue to do my best to provide the best content in these videos for you. Have a fantastic day, and I'll see you soon. Take care.